Okay, I should make you apply this.
Yes.
Okay, you are already, I've already started recording it already, so no need.
All right.
Okay.
So I'm gonna just share my screen.
Okay.
Can we see my screen?
Yeah.
Yeah, so this is my current trade. And that's this morning. I didn't trade GU yesterday, so that's this zone is saying I didn't trade it yesterday. Water was good. And this morning, this is the current trade. I had first scale in there, then second scale, then it retraced back on the smaller time frame for a third scale. So I'm waiting for a fourth one that's going to give a push down here. That's why I place this bearish order block right here. So once price starts into this zone, should be expecting another push down to break this
hello.
Bullish. Can you hear me?
Yeah, we can hear you. Just please introduce yourself and tell us your topic.
Oh, all right. Good morning. My name is Chinedu Godspot. So what I want to teach you guys is market oversight. And the reason I'm actually explaining this trade right now, I just wanted to let you understand the trade I'm currently in and how I got into the trade. Understand what is market oversight? Market oversight is having a foresight of the overall bias of the trend of the market of an asset, and anticipating its impulse and correctional move before it even happens. So it's more like looking deep into the future. And the strategy I use is something that really helped me to know where the market is going. I can have multiple entries and more like high frequency scalping, I call it HFX, high frequency scalping in between trades, and at the same time having your trade run into that direction. So what I'm going to do is I'm going to go to a clean chart right now. I'm going to ignore this trade. I'll just let it run. I'm going to go to a clean chart right now then, so we can understand what market oversight is from the practical aspects. Then maybe later on, as we even proceed, I'll discuss the theoretical aspect. If we have our writing pad, we could just have it down. We have it down. So let me check euro dollar if I have a collection here. Okay. All right, this is euro dollar. So what I do first is I always go to the 1 hour time frame. Please, can you hear me?
Yes. Hello. We can hear you. We can hear you.
All right. So I always go to the 1 hour time frame. And you might be asking, why do I do that? Like I said, market oversight. I want to know where the market is heading to. Let's even leave the whole English and term that I was given to it. Market oversight can also be seen as market direction. Now, we can clearly see on the euro dollar, what can we see this? What can we see here? Is it an uptrend or a downtrend? Clearly on an uptrend. This is clearly on an uptrend. And it being on an uptrend, it means what should we be looking at? What should be our total buyers? We should be looking for buy side liquidity. This is on the yearly time frame. But we understand that each candlestick tells a story. It tells a story of what has happened in the past. And that's why I always preach the theory of price and time. That's the concept I use. That's the strategy I use, price and time. Because I want to understand what has happened in the past, so I can be able to know how it's going to affect the future. Because whatever happened in the past, most times, oftentimes, 98% of the time always affects the future. And let's look at it now. Let's understand this trend. Let's break it down so we can know if truly this is what an uptrend, because we can't say it's an uptrend without backing up. So now we have what here? A low, So I'm going to turn this to red. I'll have what? Yeah, we have a high. You can see this is a high. I'm going to use green for this. Let me make this thicker. So now let's clone this. We have another what? High here. This is a key high. And we have what? Another low resting above. And whenever we have a higher low and we have a higher high, we can say that the market aspires to be what? An uptrend, right? Which is clearly what we can see now. And right here, we also see that there's liquidity resting above this previous high, which means we have another higher high right here. And we have what? A lower low, because we can see where liquidity has taken price, the previous price level, and what is biased to what go up, which means this is what this zone now is our trading range. Please, I want us to really, like, if you don't understand, just take me back on it. This is what our what trading range, right? Do we understand now?
Yes,
This is our trading range.
So anybody that don't understand it, we raise their
Now,
hand or they will ask question in the chat. Then you can check it.
all right, thank you. All right, thank you. So this is our trading range. We can clearly see that this is on a higher time frame. We can just, what we can do right here is just to write. You can write the market oversights MO of the 12M is bullish. It's bullish. Why am I doing this? I want to have it like a journal. It's one thing to journal on your notepad, and it's another thing to journal what? On your screen, on your chart. This one is better because you tend to remember whenever you open your chart, it's there. Then you try to find out, why is it there? Why is it there? Why is it there? You find out that, oh, this is the reason it's here. Now, for me, I'll put this here. What is the MO? The market oversight of the 12 months is bullish. Then it means the trend is bullish. And this is a yearly trade, a yearly chart. So we can't really trade a yearly chart because most of us are swing traders and are position traders. We are short-term traders. We are scalpers, and we are day traders. So now what do? I go into this zone. Since I already know this is my trading zone, I can erase this. Now I know this is what I'm focusing on. And if this is what? My trading range. Because we're using the theory of price and time. For this to be a valid, uptrend or a change of character to become a sell side liquidity, it means price must surely come to what? 50% or 60% of this price zone, either break above it or what? Hit that zone and reject downwards and break below this. Because we already know from our market structure that this is what we have. If this is coming over here and it breaks this, this is what? A higher high. It means it's going to continue bullish. Then we're expecting price to retrace maybe 50% of this zone. Then what? Go back up, right? This is what we expect price to do. But because we do not know what the market can do, a news event might come tomorrow, maybe war, or maybe a pandemic, something might happen and price will just tank down without caring about what we want to do. We also know that this is the first one. We also know that price can do this. Come up here at this zone and break below. And once price breaks below, we're expecting price to what? Reject around here again. And what? Which is what? A sell side. This is a buy, this is a sell. So because, let me use a distinctive color so you can really understand what I mean. So this is what it looks like right now. There's a possibility for this to happen, and there's a possibility for this to happen. But we are not sure. Then because of the theory of price and time, we know that there's a law that it doesn't break. Price must surely return to a previous point of rejection to fill up liquidity or imbalances. And price must surely get to 50% of its price leg before it can do either a reversal or a continuation. Because of this theory, what I do is this. Let's take this off first. I use my fib level, make do of everything I have here. Let me use the normal fib level. Then, because this is an uptrend to a downtrend, and I'm expecting price to break above, I will come here. Knowing this is a 0 point, this is what? This is also from 1 to 0. What am I targeting? I use my horizontal box because it's a bullish move I'm expecting. I'm targeting these zones, 50% of this price leg to 0.38% right here. This is what I'm targeting. That price will get to these zones. If price gets to these zones and break above it, I should see a continuation to this zone to know that it's going to be a buy side, which is using this. Please, because of market is fractal and our price is fractal in nature, whatever I'm teaching here can be used on a smaller time frame. Don't say this is a yearly chart. I'm still going to break it down to you. I just want you to understand a concept. So this is it. I can say this. Once price, let me do this. Once price comes to this zone, breaks above it, gives a rejection down here, then I know price will continue to go, which makes it what? Bullish. But if price comes here, takes the liquidity here, ranges, and breaks, then I know what? Price is bearish. Now let's just extend this and put it in the future. So we could know that, okay, this is the reason why this is here. And maybe for those that will be joining the class later, they would see this and, okay, there's a reason why this is here. All right, so that being said, take this out. We'll take out this fib. Because right now, we're not just using fibs. A lot of people say I use fib a lot, but there's a reason I'm using fib. You saw we use the fib tool, right? To get this zone. Now, let's use what we call our order block or recency and frequency and recency. What can we see here? We can see a bearish order block right here, this zone. I will mark it out for you. You can see a bearish order block. Yes. Just right here, this is an order block. Can we see that it correlates with the fib measurement, the fib level? It correlates with it. If you extend it down, because sometimes another block price can reject directly on the wick or at the close or opening price of that candle, or it can come to the opening price of the highest candle. But either way, why we call it an order block? Because we know around that zone, you should be expecting what? A rejection, an action or a reaction. So now look at it now. Look, using this, we can clearly see that at this zone, if we extend it also to the future, it correlates with what? Our fib level. And this can tell us that there is an action that is definitely going to happen in this zone. Now we can put on our chart a text. Just write it down. Say, write this down and say, or we say our fib level and bearish order block instigates a reaction on this zone. Break this down. So, all right. right. Now we find a place to put this in the future also, because now whenever we come to a chart, what do we want to do first? We want to go on the 1 year so we can read all of this and see a reaction as price draws closer to this. Now, this has been said. We can also see what another bearish order block right here, because this candle at some point engulfed this previous candle. I'm very sure we are all advanced here. Maybe we should understand the concept of order blocks. So, but if we don't understand, if you could just let me know at the end, maybe in between the classes or at the end of the classes. So now we already know what all of this is, and we are expecting price to what? To go bullish, because everything is telling us that price must come here for liquidity. So whatever we are doing now, we can't be looking for sell side liquidity, because liquidity have been taken below this. If you look at this zone, there was a bullish order block right here, and we saw that price has taken it because this bullish candle engulfed this other candle, and we can see that it did not come down to the middle of it. It came towards to the wick of it. We extend it to that wick, to this wick right here. You can see that it tapped it. Immediately it tapped it, it ran up, which is what giving us what? A higher low. And we know that this order block is resting right here. Now it is in line with this low. Now we can see how price and time, correlates together. What has happened in the past? Because price is fractal in nature, it always comes and tags in on the future. And if you look at the future, if you relate it to what has happened in the past, you see that a story has been told, which is now like replicating. It's just like this one is now like, this is like the grandfather, this one now is like the father, then we're expecting some children in between these zones. So that's how it is. It's a story that is always being told. Now, after I've done this, what do I do for market oversight? I go down to the 6 months, because I want to see something. I want to see a better story of what price is selling. Price has created an M pattern, which gave birth to the liquidity that was grabbed right here, and now price has rallied up. Now I want to know, let's go back to the 12 months. I want to know the opening price and the closing price of the previous year in relation to what this current year we are in. I want to know the highs and lows of the previous year in relation to this current year we are in. This was the previous year candle. We can say that this is what? January 2023, right? This is the low that was formed. And this was what? The high that was formed. Let's turn this to green and reduce the right. Let's do this. So this is the high. And we can say this is the opening price, because markets opened right here. And I will change this what? To a frequency and recency color. Don't mind me, I love color coding my charts a lot. So I can, whenever I see a color around a zone, I already understand what it is, and I don't hesitate. It's just like your brain is being programmed to get into the trade without hesitation, and you just get in knowing that, okay, if this should be a good trade, and if it goes against me, it means I'm wrong. So now this is what? Let's edit this. Let's use black. Previous year high, PHY, or you could just say yearly high. Okay. This also, yes, yearly low. Yeah. OP, opening price. And edit this one. All right, opening price. So this is it. Let me align this so it can be straight. This is what we can see clearly now, that this was a previous year high, previous year low, and what? Opening price. And we already understand something about the theory of price and time. I'm going to show you guys something right now. Let's get to a clean chart. For a bullish candle, we know what happens to a bullish candle. It opens, right? Rallies down, goes up, comes down, and closes it.
Yeah, hello,
That
Chinedu.
is what.
Hello?
Sir?
Yeah, sorry for cutting you
Can you hear
short.
me?
Yeah, I can hear you. Sorry for cutting you short. This class will be ending in 7 minutes from now. So just continue and
Okay.
create another one again. Okay, we know we they enter
All
the
right, no problem.
and Zoom is just only 40 minutes for
Yeah,
free.
I understand.
Yeah, we'll create another and just
No
continue.
problem.
Okay.
That's for a bullish candle. And now for a bearish candle, this is it. What does it do? Opening price, the closing price. It opens, rallies up, comes down. What does it do? Closes. That's what the bearish candle. Bullish, bearish. This candle of the previous year, what did it do? It it was a bullish candle, right? See where did it open at? It opened here, rallied up, came down, closed. Then it opened what? A bearish candle. But already know that this is a false move, that whenever a bullish candle comes, what does it do first? It first rallies down, just like this one rallied down, before coming up. Then that is what we can clearly see here. This price has rallied down, liquidated. What do you think this price is going to do soon? This price is going to push up above this high, break this zone, because this is definitely not another block, seeking this liquidity right here. So this is what it's going to do. It shows that it's respecting what this line that was created here. This is what it's respecting. We are going to see price move to this zone. If this is what we've seen, what do we want to do? We want to go down to the months, the lower months. Let's go to 1 month to see how price has respected all of this. Since you said price is telling a story, can we see that now on the monthly chart, there is a consolidation. And whenever you say consolidation, what do we know consolidations for? There is an accumulation of prices of orders. Price is seeking liquidation here. It wants to liquidate this zone. So it's accumulating orders. And before you know what is happening, price is going to rush aggressively to a particular zone, seeking what? Look at on a smaller time frame, you can see another block right here. This other block, this yearly high was mitigated by this other block of the previous year in 2022. We can see that in 2021 there's also another block that was created, and if you bring it out, if you bring this other block out, if we bring this other block out, we can know that this is the next zone price is coming to. You know, this is long term. Now, this is what a monthly short term, and now this is for the swing traders we have on this chart, on this call right now. This should be your zone that should be targeting price is going to come here and give you a reaction or give you take profit. Now, I'm breaking it down now from what's yearly to monthly, and now monthly we'll be getting to the zones which we trade as day traders and scalpers. Price is what? Accumulating. Look at what price has been doing from the previous year. Just this small range, and we've been making a lot of money from these little candles. It just shows that price is factor in nature. It doesn't care if price is in the highest time frame or smaller time frame. It tells stories that men can be able to profit from. And with this that have happened, we can edit this and place. Sorry. Okay, good. We can edit this text and say monthly bearish order block. Okay. Let's place this at the right side. Yes. Okay. Can draw this a bit closer. Monthly bearish OB. We can see this clearly now. Let me change the color to red. So, all right. Knowing that price is what seeking this zone next. There's also another little mitigation here. This one is a mitigation. It's not an order block. It's a mitigation. It can be seen as an order block, but you can call it a mitigation. So it's not something solid. Can change. Let's change the statics, or we could just leave it with this. But I don't really see these ones as order blocks because price has a solid zone right here. So I call this a mitigation block. Then let's use the line as frequency and recency. So we can know that there's also another zone we should be looking out for. All right. Now we can see that price. Let's edit this. I don't know when the class is going. Okay, it's going to end in 1 minute. So let's put mitigation. Or we can put bearish. Yeah. Understand? So we can know that it's the bear mitigation right here. You have to forgive me because I like anything clean, so I can be able to tell the story that price is telling. You know, I can be able to narrate it better. So this is what we can see, and we can clearly see that price what has rallied down from October 2023, giving us what this was a high. If you give us a low, came here, couldn't go above it. Price has come down here at the other block that was created. If you go to a smaller time frame, you see another block around the zones because now we can see bullish movement. What is price doing now? Price is rallied down. We can expect price to what tank up again to break above these highs. Once price starts to break up, and you can see that this is our monthly. You can see that the previous month that price what has broken the previous month's high, which means it's seeking buy side liquidity. It has broken two highs. This high of April and this high of what May. Now price will likely seek the high of what March. Now this is where we come to. We start breaking it down. Start breaking it down. We have our higher buyers. We already have an oversight of where market is going to on the highest of time frames. And now we want to know where market to be likely to go to in the lower time frame where we would likely to take our trades. This is the previous low, right? And this is what we have. I won't be going too deep into this concept. I just